Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 24 on August 25th, 2018. I'm your host, Eric, and in this week's show, we will cover the trades from last week on 3D Systems, the EWZ Brazil ETF, and the USO Oil ETF. And we discuss three new trades on Pandora Media, Newmont Mining, and Kinder Morgan. Now, it's always great to hear from listeners. If you have any questions about the trades presented here, or even about your own positions, feel free to email me. My email is eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading, basically so you can follow along with the trades presented on this show. You can visit our website and click on the videos tab to find that series, or check out our YouTube channel for theweeklyoption.com. Now, the market had another week of slightly higher prices. This marks 6 out of the last 8 weeks of slightly higher prices, but really nothing too life-changing. The Dow Jones Industrial Index inched higher less than 0.5%, ending the week 121 points higher to close at 25,790 points. The S&P 500 index also closed just shy of 1% higher, finishing at 2,874 points, or roughly 24 points higher. Now, I do expect the market to get a lot more volatile, or to have larger moves after Labor Day. So we're just 1 week away from that, when people typically get back from their summer vacations and really start focusing on not only their portfolios, but your major fund managers will be focusing on making sure that they finish the year out strong for Q3 and Q4. So we tend to get a lot more volatility in the second half of the year, if you will. Now, this upcoming week, we have nearly 90 publicly traded companies announcing their quarterly earnings. On Monday, we'll hear from iHeart Media. On Tuesday, I'll be looking for H&R Block, Best Buy, and Hewlett Packard. On Wednesday, Dick's Sporting Goods will report earnings. And then on Thursday, we'll hear from Campbell Soup, Dollar General, Dollar Tree, Abercrombie and Fitch, and Lululemon, several retailers there. So let's take a look at the results from the trades last week. The very first trade we put on is the covered call on 3D Systems. 3D Systems is a 3D printing software company. The symbol for the stock is DDD, David. And when we put the trade on, the stock was trading for $19.04. We looked at selling a September 20 call against the stock and collecting 69 cents in premium. Our total return, or total goal in this trade, is collecting 8.67% in 4 weeks. Now, 3D Systems stock rose $1.87 this week, locking in both the gain on the stock and the option would be exercised at expiration if stock prices finish here. So we have made $1.65 per share in total if this finishes here, and that's the 69 cents that we collect or get to keep from selling that option, and the 96 cents between where stock was when we put the trade on and that $20 strike. So that's where the $1.65 per share, or 8.67% return, comes from on our investment dollars. Now, if you close the trade today, you could buy back that September 20 call for a loss of $1.18, so $1.18, and you could actually sell the stock for $1.87 higher. You would collect a total gain of 69 cents per share. Now, as usual, this is one of those situations where I say we're both far from our break-even point, and in fact, the trade is working. This is a win. So I would basically just watch stock. You don't want to let stock fall back below $20, but I would definitely leave this trade on and just watch it so that you can keep it profitable. Don't let this trade go negative. right now you'd be locking in a total gain of 69 cents per share. But if you hold this trade, assuming if prices stay above $20 per share, you'll be locking in $1.65 per share in 4 weeks. So it's probably worth holding on to this trade to collect that dollar over the next 4 weeks. Now, our second trade was the credit spread on the MSCI Brazil ETF. The symbol for it is EWZ, Edward William Zebra. When we put the trade on, the stock was trading for $33.28. We looked at selling the September 34.35 call spread and collecting 36 cents. Now, the EWZ Brazil ETF finished the week at $31.97, which means it fell $1.31 per share from the start. The call spread that we sold is worth even less money today, so it's great. You can close this trade for 27 cents, meaning you would buy in that call spread for 27 cents, and that would lock in a profit of 9 cents per share on the option. Now, you sold the option spread really at 36 cents, so locking in 9 cents is actually locking in 25% of your premium in 1 week. So the trade has worked. If prices stay lower than $34 per share over the next 4 weeks, we'll keep the entire 36 cents that we collected when we sold the spread. So I honestly would let this trade keep going as well. Just keep an eye out on the break-even point. I don't believe in letting winners turn into losers, and the break-even point on this trade is $34.36 in the underlying stock. So you definitely want to make sure that prices stay below that. As long as the stock, the underlying ETF, finishes lower than $34 per share at expiration, you get to keep the full 36 cents that you sold the spread for. So that's great. It's working for you. Keep watching it, and I like it. I like it a lot more with stock being just under $32 per share. So our final trade from last week was the debit spread, and we looked at one of my favorites, the USO Oil ETF. When we put the trade on, the stock was trading for $13.69, and we looked at buying the 13.5 call spread for 35 cents with a maximum gain of 15 cents or nearly 43% in 4 weeks. Now, this trade marks the first time in the last few weeks for sure, that I've been 3 out of 3 trades winning trades. The USO Oil ETF finished the week 74 cents higher, making our in-the-money spread even more in the money. So if you were to close the trade today, you could lock in, once again, 9 cents per share, which is roughly 25% return on your cash outlay. That's not bad for a week's work. I might deviate from my usual strategy in this, however. Typically, I would tell you to stay in the trade since it's working. However, our maximum gain in this trade is 15 cents at the start of the trade. That was the most we could make. This is a 50-cent spread. We paid 35 cents for it, and we hoped to actually make 15 cents. We made 9 cents in 1 week, and now you'd have to wait the next 4 weeks to collect the other 6 cents. So I would actually exit this trade and enjoy the 25% return for 1 week's work. Sometimes it's just not worth keeping the risk on for another 4 weeks just to get 6 cents. So it all depends on your trading style, and that's the kicker with all of these trades. I can tell you the trades that I'm thinking about putting on, but I have a personal style that I've created over the last 17 years of trading options. You're going to have your own personal style as well. So we could both trade the same trade, but actually execute it differently and close it differently. So for me, 6 cents isn't worth the possibility of losing money overall on the strategy if I stay in this trade. You may feel differently. That's why trading is more art than science. We each will paint the picture a little differently and see the upside a little differently. So for me, I'll close the trade. Thank you very much for the 9 cents for the 25% return in 1 week, and I'm going to look at using my capital in the new trades for this week. So that being said, let's look at the trades for this upcoming week. So I first off wanted to look at a covered call strategy on a stock that's actually really affordable. In fact, you could argue that the stock itself is so cheap it's almost like trading an option. So our covered call is going to be on Pandora Media. The symbol is P as in Paul. I'm looking at owning the stock for $8.07 where it closed on Friday, and selling the September 850 call for 17 cents. This leaves a maximum return of 7.43% over the next few weeks. So Pandora Media is the music streaming app that earns revenue both from advertising and for selling a premium subscription service without ads. So if Pandora finishes higher than $8.50 on September the 21st, we will make 7.43% return on our money. So I'm happy with that return. Looking forward to this trade. Our next trade is a credit spread on Newmont Mining, symbol NEM, Nancy Edward Mary. The stock is trading for $32.03, and we are looking at selling the September 32.5-33 call spread and collecting 16 cents with a maximum loss of 34 cents. Newmont Mining is one of the large gold mining companies. In fact, it's one of the companies that has considerably large physical gold reserves. And because of that, it tends to move directly with the price of gold. Gold has been beaten down over the last few months, and hopefully it will stay down long enough for us to make a nice return on selling this call spread. Again, we're selling a 50-cent call spread. It's a $32.5, $33 call spread for 16 cents. And the final trade of the week is going to be our debit spread. And the debit spread, of course, is when we buy in a spread. I'm looking at Kinder Morgan, symbol KMI, Keith, Mary, Isaac. The stock is trading for $17.97, and I'm looking at buying the September 17.5 18 call spread for 36 cents with a maximum gain of 14 cents, or roughly 39% on your 39% return on your cash outlay. Now, Kinder Morgan, of course, for those who aren't familiar, is a large energy infrastructure company. They operate one of the largest networks of both pipeline and terminal facilities in the country. So I'll be keeping an eye on Kinder Morgan, Newmont Mining, and Pandora Media over the next week. And that's it for this week's show. Hopefully you've enjoyed it. I hope you're taking some of these trades on and making some money with me. I always am happy to have you listen. Thank you so much for taking the time this week. Happy trading. Bye-bye. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.